Hello, everyone. Welcome to the Australia Life Investment Channel. I'm Andy Wong. Today, I'm here to break down the recently announced 2025 to 2026 Australian federal budget. This budget includes tax cuts, energy subsidies, infrastructure investments, and various benefits. It even mentions some situations regarding commodities. So, in this election year announcement, what are the underlying purposes? And most importantly, what insights does it provide for us regarding the investment market? Let's take a look at how this budget might potentially impact different aspects of life for various people or different sectors in the investment field. Remember to subscribe to our YouTube channel and like our video. Also, in this episode's educational sharing, as always, there are no investment recommendations. However, I would greatly appreciate your support. And if you have any questions, feel free to occasionally message or PM me. Here we are, first sharing some key points with everyone. We haven't listed all the information here, but perhaps for those of you living in different situations, there are some things to pay attention to. For example, personal income tax has been reduced from 16% to 14%. We'll talk more about that later. Additionally, every household in Macau will receive an extra 150 MOP energy subsidy, and with a relief, it totals up to 300 MOP. So what's the question? Regarding Medicare, there will be an additional allocation of $8.5 billion, with the hope that by 2030, 90% of GP visits will be free. At the same time, the cost of certain medications will be reduced to $25. Yes, of course, the government also needs to support economic growth, so there will be $24 billion in infrastructure investments, including roads and railways in different states. We'll discuss later what the situation is in different sectors. Additionally, there will be support for housing and rent, such as help to buy and rent assistance. Furthermore, for many Australians, whether young or not, many people who are continuously learning might notice this. There is a 20% reduction in student debt, valued at $16 billion. For many university graduates with student debt, this 20% loan reduction, along with the increase in the salary threshold from $54,000 to $67,000, will make people wonder if the repayment rate for many graduates can be reduced. Then, this could increase everyone's willingness to spend, which is one of the considerations. Additionally, the Labour Party is also trying to implement a permanent plan for free TAFE for citizens and possibly PRs living locally. This could be a significant benefit. The goal is to start offering this in 2027. 100,000 spots per year. That's 100,000 free spots annually. Of course, we should continue to pay attention and follow up on these developments. And there are some friends who might have children at home to take care of, right? To realize the vision of universal childcare mentioned by the Labour Party before, the budget will include an additional investment of $427 million over the next 4 years. This will allow more families, depending on their income limits, to benefit. So at least everyone will have a subsidy for 3 days of childcare. I believe that families who usually have to pick up their children while working will benefit even more from this. Alright, as we mentioned earlier, there are many things to consider. Now, we will start discussing the perspectives in different investment fields. First, we need to understand the taxpayers, as shown in this chart. Borrowing a chart from Bloomberg, we can see that there are tax reduction measures across different income sectors. The extent varies from person to person, but at least everyone will feel it. You can see there is a slight indication of action, as shown in this chart. You can see that regardless of which income bracket you belong to, there is a noticeable reduction down to 14%. These accumulations, of course, may not amount to a large number each year, but the hope is to provide some relief and make life a bit more comfortable for everyone. Just like the content shared earlier from different budget plans, you can see that there are policies that seem beneficial, but also some that people might feel are insufficient. Therefore, in the investment market, It's important to consider different perspectives. For example, if we look at it from the overall market or economic standpoint, we are still continuing with a fiscal deficit approach, which is an expansionary measure. This kind of budget could worsen the fiscal deficit, which might increase the risk of inflation. However, the government still needs to stimulate the economy while balancing fiscal sustainability. On one hand, the overall market, especially if people are not only looking at stocks, but also considering different aspects, sectors, and even other related investment tools in real estate. These might need to be carefully considered, step by step in the future. If we further break down the sectors mentioned in this budget, the first one is new energy and green technology. They mention there might be $1 billion to support various green funds, continuing to support green initiatives. Industries related to green initiatives. It's believed that they will continue to support investments in low-carbon technologies over the past few years. Concepts of green transformation, yes. These might be more commonly seen in private equity projects. But it's not to say that there are no stock components involved. Some stocks might also have this concept, but this is just part of it. Take a closer look yourself, yes, and also, for example, regarding the construction and infrastructure sectors, as mentioned earlier, it's a very significant area. Currently, the government is heavily investing in transportation infrastructure, which should benefit construction materials and engineering stocks. We might consider which businesses could potentially benefit from this, meaning people might think about it. In the West, that is, in Western Australia, companies related to those projects might benefit. In the future, we might delve deeper into this and share more with everyone. However, I think the most obvious aspect is financially, where they aim to stimulate disposable income for families through tax cuts and subsidies. This allows people to, well, you could say, manage inflation, but it can also, well, increase some consumption. Yes, we will talk about it later. Another point is about the resources and mining sector. Now, regarding this, I think the government is actually predicting that commodity prices might decline. So what exactly will this mean? In terms of the future, under the prospect of tariffs, will imports and exports be affected?
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
Alright, now let's start breaking it down a bit for everyone. So first, let's take a look at some consumer stocks. Actually, at the beginning of 2025, in my regular interviews with SBS, I mentioned the point. Last year, we kept talking a lot about tech stocks and growth-type stocks. However, as they rose significantly last year, I mentioned at the beginning of this year that maybe this year, because the valuations of tech stocks and financial stocks are relatively high, along with some uncertain factors, perhaps this year everyone should pay more attention to some high-yield stocks. Among them, there are some consumer stocks that are related. So now, let's review what stocks I mentioned at that time, or in some media interviews. Alright, among the consumer stocks, this time, the financial budget has been mentioned by quite a few people. For example, you might immediately think of JB Hi-Fi, wondering if it will help. However, this is not a stock that I have specifically mentioned. As you can see, it has dropped a little since the beginning of the year. Yes, and the three stocks I did mention are close up, Woolworths and Telstra. Of course, the blue dashed line for Telstra can't be said to belong to a type of consumer stock, but at least you can see, right? Additionally, if you look at these three stocks from January to now overall, despite the market dropping so much, they have significantly outperformed the market. Yes, and you can see their defensive strength. Besides this point, you could also take a look at how, after the financial budget was released, these types of stocks considered as consumer stocks have shown some gains. Well, maybe, after all, although everyone is a bit more optimistic now, seeing these situations, I have to add a point. After all, this time, it might not really lead to a significant increase in consumer spending. Also, since inflation hasn't officially receded yet, I feel that we might not be able to have too many expectations too quickly. Another topic that everyone will focus on is related to the commodities mentioned earlier. Actually, starting from last year, or even the end of the year before, those who have listened to my interviews in Hong Kong would know that I've always been optimistic about gold prices. From the end of 2023, when it was at 1,800, I consistently maintained a positive outlook. And during this period, specifically in March of this year, I also mentioned copper prices and various other assets. So overall, we can take a look at what, as a major commodity country like Australia, is currently in this fiscal budget. What are the overall concerns or opportunities we might have? Before I talk about these commodity stocks, everyone can take a look. Over the past year, the price of gold, represented by the white line, has been repeatedly reaching new highs. During the green phase, it reached a level of $3,080. Meanwhile, copper prices have been fluctuating upwards. To add a bit more, why have copper prices been experiencing such fluctuations recently? It's due to speculation, but it's mainly because the market is speculating whether the United States will impose tariffs affecting copper prices by the end of this year. Secondly, people are also observing whether China's economy is showing signs of bottoming out and recovering, which might lead to an increased demand for copper. Thirdly, in the realm of new energy, there's often a need for these resources. So, under these circumstances, there's suddenly a lot of speculation around copper prices. I've mentioned in various media before that this wave of speculation is somewhat detached from the fundamentals. Therefore, it's important to pay attention to the risks involved. Yes, remember that all of this is just educational sharing and not any form of investment advice. So actually, if we look at commodity stocks, of course, we need to look at the prices related to those commodities. But secondly, I have also done an educational sharing in the media, telling everyone to remember that sometimes, even though they are called producers of these related commodities, the mining stocks, they actually produce these, like gold, copper, and even iron ore. But sometimes they don't follow the prices closely. Why is that? Because you can consider that they are stocks, meaning they are companies, and they might benefit from or be affected by the macroeconomic conditions at the time, as well as the execution ability of their management team. These factors can influence changes in their profits, such as whether profit growth is in a high-speed phase, or if growth is slowing down or even declining. These stocks or companies have their own cycles. So, the prices of commodities might. For them, it's one of the references. But if you're thinking about stocks, you need to consider several different factors. In Australia, there are some very well-known commodity stocks, which I've mentioned in the media over the years. For example, the orange line represents Newmont, which is one of the major companies in the gold mining sector. People might think that it just follows the gold price, but actually, when they produce gold, copper is also produced as a byproduct. So, it actually contributes to their revenue. According to Morley's data, it accounts for about 15%. Alright, and the second one, as shown in this chart, is the cumulative performance over the past year of the stock, which is Rio. Traditionally, 57% of its revenue is related to iron ore. 22% is related to aluminum, and only 12% is related to copper. These are things you need to know. Also, people often think of BHP, which is primarily focused on iron ore. However, in the ASX, as a company with copper, it has one of the larger reserves, so it's worth paying attention to it, especially considering its revenue. The proportion, according to major institutions, is about 34%, so remember to check for yourself whether this budget is truly beneficial or detrimental to those commodity companies. Personally, I find it a bit blurry right now, not very clear. I think the macroeconomic factors might have a bigger impact. So, this is just a little recap. In summary, this budget seems quite like a pre-election vote-winning financial budget. Regardless, at least it aims for positive development. So, it includes tax cuts, subsidies, and investments covering everything. In the short term, it sounds like it might positively impact some consumer infrastructure sectors. However, I still think, for example, commodities, as mentioned earlier, and some macroeconomic aspects like inflation. The fiscal deficit could impact Australia's debt, the bond market, even the RBA's interest rates, and possibly Trump's tariffs, affecting global investment sentiment. So remember, I personally think one shouldn't rush into investments just because of the rhetoric in a financial budget, as we've always shared in our investment education sessions. As mentioned, everyone needs to take responsibility for themselves because each person's investment needs, goals, and risk tolerance are different. So, remember that today's educational sharing does not include any investment advice. However, one suggestion is to remember to subscribe to our YouTube channel and share it with more friends. Thank you very much.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.